Hello guys, are you ready for today's video? Well, hold on tight because today we are going to tackle a very important topic that you need to be aware of: inducement in forex trading. Are you ready to avoid falling into smart money traps? If your answer is yes, then sit tight, okay? Inducement can create opportunities for you to identify potential triggers for price movements because price moves higher or lower after inducement and liquidity. So if you can spot out inducement and enter your trades after inducement, there are higher chances your trade will go in your desired direction. In this video, you will learn correct inducement identification and the right way to trade them. So let's get started. So we are looking at inducement identification, how to understand inducement, how to spot them correctly, and how to trade inducement. Okay, so what is inducement? Inducement is an area, point, or zones where traders are induced to buy or sell. So without inducement, you can't buy, you cannot sell, you cannot also identify a valid POI. So we have major inducement and minor inducement, but for the purpose of this video, we are going to pay more attention to major inducement, and you can watch my subsequent videos to be able to identify major and minor inducement. So how do you identify inducement on the chart? First, you need to identify your structure. You need to mark out your structure. In fact, once you come to your chart, the first thing you need to do is to identify your market structure so you can determine the direction of the trend. So after marking out your structures, the next thing you need to do is to identify inducement. Okay, so looking at here on the chart, so as we can see on the first diagram here, this represents a downward trend. Okay, so how do we identify that? Because from here the market is giving us a downward structure. Okay, here we can see market making series of lower lows and lower highs, lower lows and lower highs, right, signifying a downward trend. So what's happening here? Okay, the market is giving us a downward direction. We have a low here, a pullback, right, and then a break of this previous low right here. Okay, we have a break of this previous low, and then we have a pullback, and then we have a break of this low as well. Okay, now what people do wrong here is this: they mark these levels as break of structure. Okay, they mark these levels as break of structure, but guys, in the real sense, this is not the actual break of structure. This is just a break of the previous low, or if it is an upward trend, there is a break of the previous high. But this is just a break of the previous low, not a break of structure. You can watch my videos on how to identify valid structures, valid pullbacks, and how to mark them out correctly. So if you do not know how to mark out these structures correctly, you would keep making mistakes in the forex market. So this is just a break of this previous low, indicating that it is an internal structure, and this is just one swing. Okay, it's not, as you are seeing it like that, it's just one swing. When you watch the videos on market structure, you understand better about what I'm talking about. This is not the break of structure. Okay, so let's move on to the next diagram. This brings us to inducement. Okay, what is inducement? Guys, inducement is a key concept in SMC for those that trade smart money concepts. Okay, so inducement only happens when market breaks a major structure, a major high or a major low. Okay, so in a downward trend, inducement is a previous high which broke previous support. Okay, so as we can see here, this is inducement sitting here, right? This is a previous high that broke the previous support. You can also watch my video on how to identify support and resistance levels. So this is a previous high, and this is a break of structure which is giving us our inducement zone around here. Okay, so this implies that in a downward trend, inducement is the recent high, which is this, okay, that broke the previous low, which is this. All right, so why inducement? How do you take advantage of inducement? How do you trade inducement? The reason is that inducement needs to be taken out before you buy or sell. So if you buy or sell without inducement, then you are going to fall into the smart money trap. So what this implies is that once market breaks its structure right here in a downward side, okay, because we are in a downward trend, so once market breaks its structure, then you would have to sell after price have taken out inducement like this. Okay, so we can also have price do something like this, okay, and break the previous low, all right, which is this. Okay, break the previous low, which is this. So inducement to switch from here to here, because this is not our recent high. And then what do we expect? We expect price to take out inducement and then we go short. All right, so inducement needs to be taken out before you buy or sell. So if you buy or sell without inducement, then you are going to fall into the smart money trap. So this implies that once market break the structure in a downward side, just like we have here, then you can sell after price have taken out inducement. What does this imply? What will happen is that price is going to come here, react as though it wants to sell like this, inducing more sellers because we all sell at double tops, all right? Then hit your stop loss out. I hope you've experienced this before, and then price will swiftly move in your direction. So this is obviously what may likely happen, all right? So you need to always wait for inducement to be taken out before you buy or sell. So let's take a look at another key thing you need to look out for when identifying your inducement or marking out your inducement. Okay, now right here we can see the market is also in a downward trend because I'm explaining a downward scenario. What happened here? We have a break of structure right here. So as at that point in time, right where this trade had formed, this was our inducement. Sorry for my drawing skills, guys. So we have our inducement sitting here, right? We have our inducement sitting here. But what happened? Price did not take out that inducement, but we have a low, a valid low right here. Okay, price did not take out this inducement, and what happened? We have another break of structure right here. So where is our inducement? Is it here or here? Okay, now obviously we can see that this is where our inducement is, where I have marked it out. Why is it so? Because this move right here, this high, did not break the structure right here. So this would be a valid inducement if it had broken the structure, then pull back and we go short. But right here, this is our valid inducement because this is actually the high, right, that broke the structure or that broke the previous low. Okay, so in other words, for inducement to be valid, the pullback or the previous high must break the previous low. Okay, must break the major structure or internal structure, whichever one. For it to be a valid inducement, it needs to break the previous low. Okay, so you can watch my videos on how to mark out your major structures or how to mark out your major and minor inducement, so you can have a better understanding of this concept. So moving on, let us take a look at one more scenario so you can better understand this concept. So guys, the previous illustration, right, seems like a straight move, but right here you can see that the chart is not always as simple as it is on the previous illustration. So right here we can see that we have our high seated right here. Okay, we have our high seated right here, and then we have our low seated here. So you can see the internal structures moving right here. Okay, so what this implies is that we can see internal structures like this. Okay, we still see price breaking lows, taking out inducement, breaking lows, taking out inducement, right, like this, until it breaks the major structure right here. So that is our internal structure. You can watch the video on my YouTube channel to get clarity on that. Okay, so moving on right here, like I previously explained, your first pullback right here, okay, that broke structure is your inducement. This is not your inducement. This is not your inducement. So guys, always take note. Okay, this is our inducement. Why? Because this is the last pullback that broke the structure. Okay, so this is where our inducement is seated. This is not the last pullback that broke the structure, right? So we are paying attention to this level. This is where our inducement is. So let's take a look at this scenario before we head to the chart. As you can see, we have a break of structure here, right? Price pulled back. Now this is our most recent high that broke this structure, okay, which gave us our inducement here. Now once price took out inducement, okay, we have a valid low here that needs to be taken out. Right now, what happened? Price traded internally. Remember I said this is our internal inducement. Then what happened? This is our recent low that broke the structure, and we have our inducement sitting right here. So what are we expecting? Okay, so we have said once price takes out inducement from here, right, then we do what? We short. So one thing you need to be aware of is that sometimes after taking out inducement, price can push higher and tap into an extreme POI right here, mitigating it, and then drop lower. Okay, so if you are entering your trade here after inducement have been taken out, you need to wait for extra confirmation, else this zone right here, okay, is our high probability. You need to wait for entry confirmation around here after inducement have been taken out. Entry confirmations like chalk and other entry model which I teach on this channel, so you can check them out for proper understanding. So guys, whatsoever you do when you're trading for a downward trend. Always ensure that you buy or sell after price have taken out the previous high, okay, which is your inducement for a downward trend. So this same illustration is applicable for an upward trend, but let's quickly take a look at an upward trend scenario before we head to the chart. So guys, looking at a buy scenario before we quickly head on to the chart, okay, right here you can see we have a buy trend, and this is our break of structure right here, okay. These are internal structures, so we have a valid break of structure here, and this is the low, right, responsible for this break of structure here. This is a valid low, which makes it our inducement, okay. So this is a recent low that breaks structure, which makes it a valid inducement. So what are we expecting? We are expecting price, right, to come here, okay. Remember, buyers are to buy at support, you buy at double bottom, so you are induced to buy here. You see market reacting to this zone like this, and then swiftly stopping you out before going into your direction. So this is why you need to wait for inducement to be taken out. So you are induced to enter the trade early, and then afterwards you see market swiftly moving into your direction when your stop loss has been hit. So guys, let's do a quick one here before we head to the chart, okay. This is still an upward trend scenario. So right here we have a break of structure here, and then we have a pullback, right. Remember, we have another break of high here, and then we have, right, this is the break, then this is our inducement sitting here. We have a valid pullback, and afterwards what happened? After stop loss have been hit here, price swiftly moved back in an upward direction, okay. So what do we need to understand here? What you need to understand is you need to be able to understand market structure, so you can actually avoid most of the traps that the smart money put out there on the chart. So what happens? From what we can see here, this is after the pullback. Remember to watch the video to understand how to mark out your structures. This is a valid low, all right. This is our valid low. Sorry for my drawing, guys. This is our valid low, and then this is our valid high, okay, major high, and these are internal structures, okay. Now, having identified this as internal structure, so this is one mistake that most traders do, okay. Now we have a break of structure. This is our inducement sitting right here. This is our inducement sitting right here, all right. We have a break of structure around here. As you can see, we have our break of structure here. Price pulled back to take out inducement, but what happened? Because this is an internal structure, some retail traders who do not know how to mark out inducement will mark this as our change of character, and then they will want to sell around this zone. They will want to, after change of character right here, they would want to sell around this zone, okay, expecting price to push lower from here. But what happens in essence? You all can see that that was not feasible, okay. So if you can identify how to mark out your structures, you would know how to be able to avoid some of these traps, okay. So as long as this low is protected right here, guys, as long as this low is protected, there is no change of character. This is just internal structure inducement that have been taken out, and they move on to the upward direction. So do not make the mistake of marking this inducement as your chalk. Learn how to mark your structures the right way, and learn how to identify inducement so you don't fall into the smart money trap. So another thing you need to take note of is, after price have taken out inducement right here, okay, you need to wait for confirmation before you go long, because price can also choose to, you know, mitigate an extreme POI somewhere around here and long, all right. Price can choose to mitigate an extreme POI, which is a high probability entry setup. So you can look for entry model like the chalk around this zone, the inducement zone, or the single candle order block, or any other entry model, which you can also find on my YouTube channel, right? You can use these entry models to enter your trade. So let's head to the chart and take a practical look of inducement. So here on the live chart, this is a bullish trend scenario, okay. So as you can see here, price broke structure here, okay. So what next do we look out for? We look out for our inducement, which is sitting somewhere around here. So now we are going to wait for price to take out this inducement, and then we can go long. So let's play price forward to see inducement taken out, and then we can buy. So guys, as you can see here, we have another break of this high, and then our inducement moves from here to here. So having moved our inducement from here to here, okay, so this becomes our extreme POI right here, where we can get high probability trades or entry. So let's play price forward to see if we will get an entry around this zone. So guys, as you can see, price is reacting at our inducement zone. Okay, yeah, we can see a double bottom here. We can see some kind of rejection candles around here. So this is smart money trap. All right, you need to be able to identify inducement. This is not a change of character or anything of sort, because we have a break of structure here indicating that price is interested in going higher. So we need to see price take out inducement before we go higher. Okay, so right here you see the market makers are inducing more traders to enter the trade here. So remember, we always buy at double bottom, but you need to buy at double bottom once inducement has been taken out. Okay, so right here more traders have been induced to buy. Many traders will enter their trade here and probably set their stop loss somewhere around here. But what will happen, we see inducement to be taken out, and this buy trade that have been struggling for some hours right here will just swiftly move in that direction after your stop loss have been hit. So let's play the price forward and see what we've got. So guys, as you can see here, after inducing buyers to buy around this zone, what happened? Price swiftly did what? Moved lower, taking out the stop loss and mitigating our extreme POI around here. Okay, and you will see so many traders will see this as chalk and then come to mark here as their order block to sell, right? But guys, they will be trapped. Okay, so right here price has mitigated our high probability POI. So right here we are going to go in for our long entry. So we are going to target our previous high, which is somewhere around here. Okay, this is our previous high, guys. So that is going to be our target. So let's play price forward and see what we've got. So guys, we hit take profit on this trade. Okay, as you can see, I use the same strategy and this same trade on my own account. Okay, this is the trade I took today with my community, as you can see on the screenshot. So guys, you can use the same strategy to take your trade. Without inducement, do not buy, do not sell, else you're going to fall into the smart money trap. So let's take a look at a few more examples on the chart. So right here, as you can see, this is a downward trend scenario. Okay, so right here we can see a valid break of previous low here, and then where is the high responsible for this break? We have it around here. Okay, we have the high responsible for this break around here. So what happened, this becomes our inducement right here, sitting here. So we are going to wait for price to take out inducement, right, and then we short. So what happened, price came, swept this high, right? So after price swept the high, we have bearish momentum candles and we short all the way. So moving on, what happens next? We have another break of structure right here. Okay, so where is the recent high responsible for this break of structure, which is here? All right, and what happens, this becomes our inducement. We are going to wait for price to take out inducement, and what happened, price came back, took out the inducement and dropped lower. So this is our previous low. Okay, this is our previous low, and what happened, price still broke this structure. So moving on, guys, so as you can see here, we have a valid pullback that broke the previous low. Okay, so if you have not watched my video on how to identify pullbacks, then you can go and watch it. So right here we have a pullback here, right here, that broke this previous low. Okay, so it broke the previous low, which is so this is the high that broke the previous low, as we all know. Okay, so our inducement is now sitting right here. What happens, price did what, took out inducement, because this is the highest point. Price took out the inducement, then we can go to lower time frame, get an entry model, and then we short all the way. Okay, so our risk to reward is going to be more than 1.3 or so. So moving on right here, okay, you can also see that we have another break of structure right here. Okay, so where is the high responsible for the break of structure? This is the high responsible for the break of structure, and then we mark it out as our inducement. So what happened afterwards, market swiftly did what, hit the stop losses of retail traders, and boom, what happened, price went all the way downward. So this thing keeps playing out, guys. It keeps playing out. Here, after break of structure, we have a pullback here again, and then we have another break of structure right here. Okay, where is the high responsible for the break of the previous low? This is the high right here. Okay, this is the high right here, and this becomes, remember, this is, okay, this is a pullback, and then we have a break of this structure. So where is the high responsible for this break? Okay, the recent high, as we have always been taught. Okay, so here we have it right here, seated here. So this becomes our inducement, and what happens? Price took out inducement from here and went lower. So guys, this is simply how to use your inducement to trade in the forex market. So market is fueled by inducement, market is fueled by liquidity. So the market makers induce you to take the trade early, and you need to be able to identify this by marking out your structures, marking out your inducements, and ensure you take your trades after inducement or liquidity have been swept. So in summary, guys, in all you do as a forex trader, ensure that inducement has been taken out, liquidity has been taken out before you buy or sell. Thank you so much for watching. If you got value, do well to like and subscribe, and as well turn on post notifications so you don't miss any of my valuable content. If you are still lost on what inducement is, you can watch this video multiple times to get a better understanding of this concept, and do well to practice and backtest this strategy. Okay, as always, don't forget to share and drop your comments in the comment section. Tell me how you feel about this video. I will be anticipating your feedback. See you in the next video, and stay connected to wealth.